Hello and welcome. Yesterday, euro bulls managed to cope with downward pressure. Bears failed to break below the April lows, which led to an upward correction. As a result, the euro-dollar pair broke through the resistance level of 1.0808, thus providing traders with entry points to go short. Today, in the Asian session, there is a growing demand for both the euro and the pound sterling. However, the situation remains challenging. Although US stocks have posted slight gains, concerns about the war in Ukraine, a slowdown in the Eurozone economy, as well as high inflation rates around the world are putting pressure on markets. All these will continue to dampen demand for riskier currencies and prevent them from advancing significantly against the US dollar and safe haven assets. Yesterday's macroeconomic calendar was bereft of any important releases that could have a severe impact on the dynamics of the quotes. Today, traders may take notice of data on German producer prices and the IFO Institute's Business Climate Index. However, the indicators will hardly be upbeat. Besides, Italy will report data on foreign trade balance. Special attention should be paid to industrial production and trade balance in the euro area. If February statistics exceed analyst expectations, these will hardly provide substantial support to the euro. In case industrial production falls sharply, the European currency will come under additional pressure. In the second half of the day, the United States will release data on exciting home sales. The main focus will be on the speeches of ECB board member Joachim Nagel and such Fed members as Charles Evans and Mary Daly. Market participants are aware that both central banks have taken a more aggressive approach into tightening monetary policy to combat surging inflation. Thus, today's statements of the officials are unlikely to change the situation. From a technical point of view, it's worth focusing on the level of 1.0808. A false breakout at the mark will create a buy signal. In case of bull subdued trading activity in this area, I recommend opening long positions only amid a renewed decline to 1.0761. The principal task of buyers is to regain control of 1.0848. If the price consolidates about this level, the way to 1.0885 will open. At this mark, it will be possible to go short on a rebound, counting on an intraday correction of 25-30 pips. Short positions can be considered at 1.0848 in case of a false breakout. Alternatively, if the price falls below 1.0808 amid downbeat macroeconomic calendars in the area, a sell signal will come in the euro-dollar pair will most likely slide to 1.0761. Its breakout will lead to a drop in the euro to 1.0723 and 1.0682. In this area, traders will be able to open long positions on the rebound with a view to catching an intraday correction of 25 pips. Speaking of the British pound, I recommend focusing on the level of 1.3049. A false breakout at this mark will create a sell signal. Bears will strive to take control of 1.3023. If the price fixes below this level, the pound sterling will extend losses approaching 1.2996 and probably 1.2974. At the mark of 29.74, it will be possible to open long positions on the rebound, hoping for an intraday correction of 20-25 pips. If bulls are able to protect 1.3023 and the price forms a false breakout at this level, market players will have a chance of going with a view to reaching 1.3049. If the price consolidates about this mark, the pound-dollar pair will rise to 1.3073 and then 1.3094. At the level of 1.3094, traders will be able to open short positions on the rebound. Short positions at 1.3073 can be considered only in the event of a false breakout. Good luck.